Good morning, good morning, good morning. Welcome to today's Morning Blast. It is finally Friday. It is the 25th of July, all day. You join myself and Mr. Michael Brown to jumpstart your trading day with a review of yesterday, a preview of today, uh, probably a bit of a rant at something or other. But before we crack on, I'll get the legals out the way. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Hello, Mr. Michael Brown.
Indeed, yes. Very good morning, Ryan. Good morning to all our listeners, and a very happy Friday to everyone as well. We finally made it to
Indeed,
the end of the week.
indeed. I still can't get over the fact it's already the 25th of July, but there we go.
No,
It
but you know
it's,
what? The sun is shining.
it
It
is.
looks like it's going to be nice and warm today. I'm off down to the seaside later, so all is right
Oh,
in the world.
oh, very nice. Bit of paddling. Before we crack on, can we talk about Trump's visit to the Fed renovations?
Yes, because
Um,
can I rant about that?
Yes, I would love you to, because for anyone that hasn't seen it, it was an absolute comedy, or as the kids say these days, absolute cinema. With
Yeah,
Trump with his hard hat on, tries to mug Powell off. Powell doesn't stand for any of it, and basically mugs Powell and mugs Trump off back. But go on, you take it away, son.
well, no, I mean that you've set the scene very well there. You've got
Thank
if
you.
anyone hasn't seen it, you've got President Trump and Fed Chair Jay Powell both suited and booted with stupid white hard hats plonked on their head, and basically Trump has essentially tried to ambush Powell on this tour
Yeah,
that he was having of the renovations of the Fed. They've been throwing around this number 2.7 billion, I think it was 2.5 billion that the Fed have been spending on this renovation project, and all of a sudden, while they're stood there being live streamed around the world on God knows how many media channels, Trump has gone, well, the cost of renovations is $3.1 billion. To which Jay Powell, and I would stress, go and watch the video because
oh
to give
yeah,
him
absolutely.
absolutely every bit of credit he deserves, Powell handled this brilliantly and just went, no, it's not. And it's the first time, I think, in 6 months that I've actually seen anyone stand up to
Yeah.
Trump's sort of bully
It,
boy
it it was
tactics.
the way
Um,
it was the way Trump was reading off his piece of paper, that's the best bit, and then literally Powell takes the piece of paper off of him, puts his
yeah,
glasses on, starts
and
reading
this is
through, and he's gone, "You've included a building that we finished 5 years ago."
Yeah,
Literally.
exactly, which is
Oh
complete and utter nonsense. I mean, it's quite clear that the administration have got absolutely no idea what they're doing on this one. And, absolutely fair play to Chair Powell for calling them out
absolutely.
on that.
Yeah,
They
absolutely.
deserve to be called out on, if I'm being generous, that creative accounting that they're doing to make effectively try and scapegoat the Fed. I mean, in fact, that whole visit was shameful, to be completely
Yes.
honest
Yeah.
with you. I mean, we even setting aside Trump trying to railroad Powell in terms of the accounting side of things. There was one point where Trump was stood there, and I think one of the journalists said, what can Jay Powell do or say today that will make you happy? And Trump has thumped Jay Powell on the
Yeah. Yeah.
back and
Yeah. Yeah.
said, well, he could cut rates. So, to be completely honest, I think it's hard not to feel sorry for Jay Powell at this point because, and I know I'm going to
Absolutely.
get pelters for this, but I don't give a fuck, to be honest. He's done a bloody
Go on,
brilliant
son.
job for the last 7 years. He's been an incredibly dedicated public servant before that, because of course he was on the Fed board since the early 2010s. We're in the last year of his term. His legacy is a very, very strong one at the moment for having brought the economy through COVID, brought inflation back under control, engineered a soft landing in the
Yeah.
economy. And he's got to put up with, well, what's now 10 months of basically being bullied by an ignorant president who has no understanding of macroeconomics
Exactly. So,
whatsoever.
forever I've been saying that unpopular opinion, but I'm actually a big fan of power. I know it's very easy to hate on federal officials, but now you look at what's going on, and if you've got to have, like as you said, you've got to have full respect for what Power's doing. Because I'll be quite frank, if that was me in that role, I would have told him to go fuck himself.
Oh,
Um,
I said exactly that to the boys at News Corp last night.
I mean,
Powell's a much better man than me. I'd have probably
yeah.
told Trump to stuff his job there and
I
then.
mean, he's literally only staying in the role now because he obviously values the US, well, kind of, doesn't want to kind of just throw away the US economy. Because
Hmm.
obviously, like the, markets and that would just implode if he resigned on the spot. But Jesus Christ, it's going to take, how much can he keep going on? Because Yeah, he's like you said, he's a better man than you and me because I tell you what, Trump would be trying to pull that piece of paper out of his arsehole if it was me. But
Well, you wouldn't
anyway,
get it in because Bill Pulte's up there.
well, I'd have to move the soles of his feet apart and then try and find a gap.
Oh no.
But on that, well, as we think of that mental image, go on, let's move on. What's been
Yeah,
going on?
as I try not to vomit while I get through the rest of the morning blast this morning. Besides that, frankly, shambolic scene at the Federal Reserve yesterday, there were a few other bits and bobs going on, but I suppose the broad takeaway is that the risk rally rolls on. The S&P adding another 0.1% yesterday, the Nasdaq
What?
up by 0.3%, fresh record highs for both, but it was a pretty subdued day for markets elsewhere, very much getting summer markets vibes from what we've seen over the last week or so. As if to epitomise that, the VIX is trading at roughly 5-month lows around the 15 handle. So for those of you who've never traded summer markets before, welcome to what the next probably month or so is going to look like. You're going to end up doing a lot of twiddling of your thumbs. That said, there were a few events and catalysts worth mentioning from yesterday. First and foremost, we had the latest round of flash PMI figures. I won't go through the numbers precisely, but we did see some upside surprises in the Eurozone, where the services gauge rose to a 6-month high and the composite gauge rose to an 11-month high. The manufacturing index in Europe actually came in at a 36-month high, but that landmark was reached with a figure of 49.8, which just gives you an idea of how long the Eurozone manufacturing slowdown, I guess you could call it a depression at this point, has been
Yeah,
going on, that you can have a 3-year high PMI and it still be that far below 50. Here in the UK, the PMI is surprised to the downside, with the services metric coming in at 51.2, down from the prior 52.8. The composite output metric, that fell to a 2-month low, and we have had further disappointing data out of the UK this morning, with both headline and excluding fuel retail sales missing expectations. Sales rose by just 0.9% on a month-on-month basis in June. And if that was not bad enough, the prior month's prints, the May data, was revised 0.1% lower on both metrics as well. So the UK economy continues to, frankly, go down the drain at rather a rapid pace. Besides that, we had a policy decision yesterday from the ECB, of course. If anyone managed to stay awake throughout all of that, it was a very, very dull affair as expected. The ECB holding rates steady at 2% on the deposit rate, while reiterating that they will continue to take a meeting-by-meeting and data-dependent approach to future policy decisions, and that they are not pre-committing to any particular rate path. President Lagarde's post-meeting press conference was the typically dull affair, although she did reiterate that they are in a, quote, good place when it comes to monetary policy, which is the same language that was used in June, and very much implies that if the ECB have a choice about it, this will probably be where they end the easing cycle. That was very much in keeping with the post-meeting sources reports that we received. Bloomberg noting that the baseline scenario is that the ECB will again hold rates steady in September, with Reuters sources later adding that policymakers have set, quote, a high bar for a rate cut in September, with such a move needing both a deterioration in economic data between now and that meeting, which is on the 8th of September, I believe, and also downgrades to the economic projections that will be delivered at that meeting as well. Frankly, a complete and utter snooze fest, very much as expected, and absolutely no surprises from the ECB there. Again, no European has ever wanted to rock the boat before they sod off on an 8-week long summer holiday, and the ECB certainly didn't want to do that yesterday. Across the pond, we had the latest jobless claims figures, both initial and continuing claims better than expected. Continuing claims, of course, coinciding with the July non-farm payroll survey week. We did have a somewhat soft new home sales figure, though, at 627,000, but that is broadly unchanged from the pace seen in May, so not worth worrying about too much. In terms of other bits and bobs from yesterday, it was a relatively quiet day, actually, on the trade front. We didn't have too much by way of significant headlines. I suppose Trump was preoccupied with looking at building sites as opposed to getting trade deals over the line. Nevertheless, we did hear from Malaysia, who said that their talks with the US are going well and that they are on track to meet the 1st of August deadline. The Malaysia Trade Minister also adding that their target in terms of the tariff that they'd be happy to accept is, quote, as low as possible. Well, thanks, mate. I think that's
No shit.
probably exactly exactly the same for everyone involved in these talks. For reference, Malaysia would be subject to a 20% tariff, according to that letter they were sent at the start of the month. Also on the trade front, one for Tom Talks Cars, if he's on the call, Nvidia, apparently AI chips belonging to Nvidia worth $1 billion have been smuggled to China after President Trump imposed various export controls. This is, I guess, not particularly surprising, but it just shows the difficulty that the US will have if they do actually want to properly crack down on exports going over to China. Of course, there's very much a sort of AI arms race
Yeah.
going on that front. In terms of other headlines from yesterday, just returning very briefly to the ECB. The Portuguese government have named a guy called Alvaro Santos Pereira as their new central bank governor. He is currently the chief economist at the OECD, and upon confirmation, he will replace Centino in that post. Centino has been one of, if not the most vocal dove on the governing council at the ECB of late. So that is an important or potentially important shift. Also, with absolutely impeccable timing, the Portuguese government decided to announce that decision halfway through President Lagarde's post-meeting press conference yesterday, which I'm sure they'll get a bit of a slap on the wrist for. Sticking with central banking, we've heard from Bloomberg citing sources on the Bank of Japan this morning. Of course, the BOJ announced their next policy decision in the very early hours of Thursday morning next week. We had reports earlier in the week that the Bank of Japan will be holding rates steady at that meeting, but Bloomberg adding to that this morning, noting that the Bank of Japan apparently sees the potential for a rate hike being delivered this year. They expect enough data on that front to be available by the end of the year, but as of now, see no need to make any drastic or dramatic changes to their outlook. But they do, of course, see a trade deal with the United States reducing uncertainty, very much in line with what you would expect those sources to be saying. And in fact, money markets only pricing about 20 basis points of further tightening from the BOJ by the end of the year. I think their bigger issue or worry at this moment in time will be political than anything on the trade front, obviously with the potential for Ishiba to be resigning, or maybe he isn't, or maybe he is. We're not entirely sure what's going on that front. Nevertheless, we did have some data out of Japan overnight, latest Tokyo CPI figures coming in below expectations at 2.9% on a year-on-year basis. That's the first time.
What do we?
Oh, go on.
What do we think on the? And what do we like about the Tokyo CPI data?
Well, you like the fact that it leads the national CPI figures by about 3 weeks, and that is the first time we've been below 3% in a few months. That also dampening the chances of near-term tightening from the Bank of Japan. A few other bits and bobs from me this morning. Just lastly, Union Pacific and Northern Southern, they are apparently in advanced talks on a merger. This has now been confirmed by the companies in question. The sources cited by the Wall Street Journal were rumouring that deal was going to take place last week, but thankfully it looks like it hasn't been derailed just yet. We had earnings out from Intel last night. Intel delivering a revenue beat, but a profit miss. Better than expected guidance. They also reiterated that they're going to be cutting their headcount by about 15%. The stock was incredibly choppy after hours. When I went to bed, it was up by about 4%, but I'm not 100% sure where we finished up last night. And last, but by no means least, just one.
Sorry, just before you,
hello.
just while you're on Intel, there's also might worth be adding that they plan to the scrapping plans like to spend tens of billions of dollars on new chip facilities in Europe. So this could have some negative impact on the European beneficiaries of that. So quite a severe cut on what was proposed in terms of capex in Europe on there. So the EU will be no doubt looking at this and grimacing.
Yeah, that's a very good point. It goes without saying, no expert on this one, but it feels increasingly like Intel are, to coin a technical term, fucked.
Yeah.
To put it bluntly. Last, by no means least for me this morning, just one headline from the AI space. OpenAI, they reportedly plan to release their GPT-5 model in early August.
Right, yeah.
So good for them, I guess. I suppose that'll be better than number 4, but not as good as number 6 when that arrives.
No, exactly. Thank you for that, Mr. Michael Brown. Just before I crack on and read some more headlines from the overnight news roundup, I've got a question for you. I believe, I'm probably wrong on who this was, but I believe I saw someone tweeting yesterday or mentioning yesterday that Jamie Dimon, has said that markets are failing to price in the chance of rate hikes. I'm sure it was Dimon that was quoted to say it, but it's someone like Dimon. Have you got any? Yeah, have you got any vibes on this? Any feelings on this, or do you think it's just someone just saying stuff to get in the papers?
Um,
Do you think we should? Do you think rate hikes are at all something we should be considering as an edge case, an outlier? In the, like, when I say, I don't mean in the next meeting, obviously, but I mean in, say, the next 6 months.
no, I mean, no, to be honest. Yeah, I'm sorry, I haven't been
Good.
asked about that for a hell of a long time. The reason why I say no is because even in a scenario where, and I haven't seen those comments from Diamond myself, but if you
To
imagine.
be honest, don't please don't shout at me, listeners, if it wasn't Diamond. It was someone quite significant that mentioned it, and I'm just thinking it was
But if,
Diamond.
if if you imagine a scenario where, let's say trade as an issue is settled, and that allows sort of animal spirits to get back up and running in the United States, the labour market tightens up a little bit more. The Fed are already running a policy in terms of the upper bound of the Fed funds rate is still 150 basis points above neutral. So I see very, very little reason why the Fed would want to, even if inflation were to
Yeah,
move
that's
higher
true.
on a sort of sustained basis. I see very little reason why the Fed would want to move even further back into restrictive territory. I think we're still in an environment where the two sort of policy choices that the Fed have are either cut or hold steady for a more prolonged period of time. I think we're some way off talking about the prospect of rate hikes.
On the plus side, though, it would make Trump
Oh, it would be
explode.
brilliant to
So
watch.
there's it'd be, again, to coin the phrase that the kids are using all these days, absolute cinema. But anyway, moving on. Some choice headlines via our dear friend Zach Eisman from the Overnight News Roundup. As usual, do check out the Substack, give it a subscribe, etc., etc. Starting off in trade, Trump is shifting to deal-making mode on China. That's according to a Wall Street Journal article. Notes the White House is putting a priority on doing business with Beijing as it prepares for bilateral talks next week. So again, cue tons of headlines next week about China and US trade deals. Japan's government said that profits from a $550 billion investment package agreed in this week's tariff deal with the US would be split between Japan and the US, according to a degree of contribution by each side. Australia and India, they're likely to expand their free trade agreement in the very near future. Obviously, we've heard of India and the UK free trade agreement, so they're all shifting around. South Korea and the US, they reaffirmed their commitment to pursue a mutually beneficial trade agreement ahead of August 1st deadline, when duties are set to rise, the Asian nations industry ministry said, according to Bloomberg. In macro news, as we were talking about at the start of the show, Trump locked horns with Fed Chair Powell during a rare presidential visit to the US Central Bank on Thursday. Obviously, he's criticising the costs. Powell called him up for it, and to be honest, I think it was 1-0 Powell, but there we go. I see some ardent Trump fans are basically saying that Trump walked all over Powell, but I think that's bollocks, to be honest.
I can
Trump said
also
on Thursday, it's
guarantee
not,
that a certain UFC fighter is going to be very angry at us when he wakes up and listens to this.
oh, morning, Nick. Morning, old son. Um, Trump said on Thursday as well and yesterday that it's not necessary to fire Powell and that such a step would be a big move. So I think we can kind of put, I think the risk now is Powell resigns. As I've said for a long time, Trump's not going to fire him. I don't think he can
Mm.
fire him. But the way it was looking yesterday, Powell is very clearly at his edge now where he could just go, fuck you all. But we'll see. I still think it's an edge case, but there we go. Former Fed Governor Kevin Walsh said he'd be, quote, honoured to
Of course
serve,
he fucking
unquote,
would.
if Trump taps him. Yeah, exactly,
He's been
right.
desperate for the job for
But
about a decade.
yeah, exactly that. Bank of Japan officials, as Michael just said, they're mulling the possibility of another rate hike by the end of the year. To the foreign investors in Japan, they've bought Japanese stocks for a fourth week in a row, bolstered by a weaker yen and a rally in artificial intelligence linked technology shares. Stocks this year even as concerns mounted ahead of the upper house election. China, their stocks edged lower on Friday, pausing their recent rally as investors looked in gains ahead of the Politburo's meeting next week, although the market remained on track for a fifth straight weekly gain. Sticking with China's central bank pumped a sizable amount of cash into its financial system on Friday to stop a bond sell-off, gaining momentum and stabilizing financial markets. That's called intervention for anyone that's not fully aware. So what to keep an eye on. Martin Kazaks from the ECB, he says there's little reason for the ECB to lower rates further unless the economy suffers a major blow. UK, Michael's covered the retail sales, which partially bounced back, but it wasn't exactly good data. UK consumer sentiment worsened in July as the country faces an unhappy combination of weak growth and still high inflation. That's according to the GfK survey. India, their central bank will continue to prioritise stability in prices while boosting growth in Asia's third largest economy. That's according to their governor. Moving over to Argentina, they've reached an agreement with the IMF on the first review of the country's $20 billion program, a vote of confidence for President Milei ahead of midterm elections in October. Again, hats off to Milei. I think he's really done well with
Yeah.
Argentina. He's made a few, well, I say difficult decisions. I think unless you're a socialist, these weren't that difficult decisions, but there you go.
And if you're a socialist, please go and listen to another call.
Yeah, exactly. No offense, but fuck off. Geopolitics. Oh God, how to alienate people. Oh, I'll be down the pub later if anyone wants to buy me a beer. Thailand acting leader warned that the armed military conflict with neighbouring Cambodia could, quote, potentially develop into a war, unquote, as troops use rockets and artillery to shell targets along the contested border for a second day. In equity news, before I hand back to Michael to finish off the week, we've heard about Intel cutting their workforce by 15%. Samsung Electronics in talks with the likes of OpenAI and Perplexity to integrate more AI services in the upcoming Galaxy devices, seeking a wider range of offerings beyond Google's Gemini. Charles Schwab, they authorize a new $20 billion with a B dollar stock repurchase plan as shares touched all-time highs. Boeing's 737 MAX 7 jetliner won't be certified until the first half of 2026, missing the US plane maker's target of wrapping up work this year. That's according to Southwest Airlines. So another turbulent bit of crisis for Boeing. Sorry, I've squeezed that one in there. Thumbed it in, as the kids would say. Paramount Global, their merger with Skydance Media was approved by the US Federal Communications Commission, which backed the deal after the Trump administration extracted concessions on the news and entertainment company's political coverage. Chinese developer, I forgot these lads were all still going, to be honest. I thought they went bankrupt years ago. But Country Garden Holdings, remember them? They've agreed to some key restructuring terms. A group of bank creditors have demanded, this according to Bloomberg sources, potentially easing the path for an overall debt deal. Feels like a lifetime ago that we were reading out headlines from these guys every day. And then LG Electronics, their earnings fell in the second quarter as market competition intensified. Volkswagen, they lower guidance as tariff hits profit in the second quarter, so they've stalled somewhat. And finally for me, Eni, the Italian energy giant, giant-ish, reported profit and beat analyst estimates as proceeds from asset sales and cost cuts helped counter a weak oil market. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. The other one on earnings, I don't know whether you mentioned it, Puma, they're down 20% this morning. They cut their guidance in early hours, so the stock taking a bit of a shoeing in early trade.
Oh, you know what? I was thinking, is it going to be like a big cat noise or something like that? But no, yeah, well, I literally, as soon as you said Puma, my mind was racing. Going, where's he going? Where's he going?
Oh dear. Right, where am I? The day ahead. Yes, where are we? We do have a few bits and bobs on the docket today. In 7 minutes' time, we have the latest IFO sentiment figures out of Germany. The headline business climate metric that is seen rising to 89, up from a prior 88.4. The current assessment and expectations components, they are also seen rising on a month-on-month basis. And other than that, the only other release today comes at 1:30, which is the US durable goods orders numbers. Orders seen falling by 10.7% in June after the 16.4% rise in May. We have mentioned this, I think, every day this week, but if anyone hasn't already picked up on it, the 16% rise was caused by Qatar Airways ordering 200 odd Boeing jets in May. Obviously, that didn't happen again in June, so you have a very, very unfavourable comparison, and as a result, orders will, at a headline level, fall off a cliff, but it is all noise and going to provide absolutely no signal whatsoever. So anyone who runs around at about 2:00 this afternoon going, this is a sign the US is going into recession, Trump is right, you need to cut rates, just ignore them, block them, tell them they're a complete and utter idiot, because it's absolute nonsense.
Well, quite. I was actually going to think, I'm debating, just because I'm in one of those moods,
Oh
about
no.
compiling a list of the people that are doing this, because as we said before, it's a great litmus test for discovering who actually knows what the fuck they're talking about. And I will, pardon my French, but I will be potentially making a list of cunts that don't understand this and are just posting bullshit. Because, as I think we are both in agreement, these cunts need to be called
No,
out.
I would agree with that.
But there we go.
It's going to be a very long list.
Okay,
I do have more, because I haven't finished yet.
go on.
I
No, go,
was
go.
going to say there are no central bank speakers due today. Of course, the Fed's still in their pre-meeting blackout period. Do bear in mind, though, that we do tend to see various ECB members sort of popping up on news wires the day after a meeting. So that could
Yeah.
indeed happen throughout the day. And of course, the usual sort of standing reminder around the potential for weekend gapping risk on any geopolitical developments, trade headlines, and of course, potentially a bit of de-risking as well. We've got those US-China trade talks that are due to get underway in Stockholm next week. So I wonder whether participants will perhaps take a bit off the table before then. But otherwise, for this morning and for this week, that is all from me.
Wonderful. Michael, thank you as always, my dear friend. Really do appreciate you doing these with me. Listeners, thank you as always for tuning in. We really do appreciate you as well. And whatever you're doing today, stay safe, keep it tight, have a fantastic weekend. If you can't be good, be careful. If you can't be careful, buy a pram. We'll see you all on Monday. Much love.
Indeed. Bye for now.